You're looking at fractals within fractals within fractals. You're looking at patterns within patterns within patterns. And these chart patterns repeat over all time frames, and you can use them to your advantage on all time frames. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Welcome everybody to another episode of Talking Trades. And today we have Kevin Wadsworth and myself, Patrick Karim. And Kevin will be talking to you about snowflakes. No, I'm kidding. Not snowflakes, but you know how fractals appear in snowflakes and in nature and a whole bunch of other places? Well, guess what? They do appear also in the price charts. And Kevin's going to talk to you about that right now.
Yeah, sure. Thanks, Pat. Well, what I'm talking about here is the idea that it doesn't really matter whether you're looking at a chart in minutes or hours or days or weeks or months. Whatever time frame you're looking at, the chart patterns they repeat within, the smaller patterns repeat within the bigger patterns, and they repeat within bigger patterns still. So when you talk about technical chart patterns, perhaps it's a bull flag or a bear flag or some kind of breakout that's occurring. That happens on multiple time frames. So clearly what happens on a chart that just covers a few hours is less important, less meaningful than what might happen on a chart that covers a period of weeks or months or even years. So you have to get into this mindset around what is it that you're looking at? Are you looking at very short-term price movements, or are you looking at a much bigger long-term trend? And I'm going to illustrate that with three charts really, and we're going to use gold and look at the gold chart. And what I want to sort of show to you is that particular chart patterns will occur on all time frames embedded within each other effectively. So I'll just share my screen and we'll start with the 1 hour chart for gold. We're looking at a time frame here that goes from the 1st of April 2024 through until a couple of days later, 2nd, 3rd of April. So you're just looking, this is the hourly chart. And if I put the candles on, each one of these candles covers the time period of 1 hour. Okay. And you can see the chart going from bottom left to top right. So if you're a trader or if you're sort of analyzing the chart on this time frame, I'm just going to use a particular chart pattern that I'm probably fairly well known for, and that's these cup and handle arc patterns. They occur on multiple time frames all over the place. And so what you're looking at here is the price moving up and then forming this cup type pattern. And then you get this kind of handle that forms on the right-hand corner of the cup. Doesn't always happen, but very often you get this sort of period of consolidation in the top right-hand corner. It can consolidate up here a little bit. It can consolidate here. It can pull back further. There's no set way in which these cup and handles build out. I know if you read a classical technical chart instruction manual about how cup and handles form, there'll be a set of rules and a set of criteria that define a cup and handle. Well, in my personal view, whilst that has some merit, it also constrains you and it sort of prevents you from being able to recognize a chart pattern for what it is, and that is either bullish or bearish. Anyway, the point here is that you've got this cup pattern forming that's clearly identifiable, and then you've got this consolidation, and then you've got the breakout, and you've got the move that jumps to the upside, and then there's another consolidation, another upside move. So what I'm highlighting here is the cup and handle pattern for you, and the cup and handle pattern formed over the space of maybe a day or so. Each one of these is 1 hour. Each one of these candles is 1 hour. So this entire cup and handle pattern took 1 day to play out. Okay, so just bear that in mind. And we'll look at the gold chart that stretches through a period of a few months. So this starts in June of 2017 and it goes through until sort of September of that year. So 3-4 months. And if I pop it back onto the candle chart again, you'll see, guess what? That's right, another cup and handle pattern. So this cup and handle pattern formed over a period of, it started here in June of 2017 and finished there in August of 2017. So this is 2 months. The previous chart was maybe a couple of days, and this one is a couple of months. And again, you've got this typical chart pattern where you get the cup forming, you get a consolidation period in the top right-hand corner of the cup, and then price accelerates to the upside and reaches a measured move target, and then it consolidated, pulled back, and then price action did whatever it was going on to do after that. So you've got a cup and handle pattern that formed over the period of a couple of months. If we go on to, well, I'll tell you what we can do next. If we just zoom right out, I'll get rid of these annotations. I've got a blank chart now, and I'm going to zoom out onto the monthly time frame. So each one of these candles that you're about to see on the chart covers a period of a month. And I'm going to zoom right in. And so we've looked at a chart that covered 2 days. We've looked at a chart that covered 2 months. Now we're looking at a chart that starts over here in 2012 and stretches across to 2020 or even further to 2024, 2025, where we are now. So we're looking at a chart that covers at least 12 or 13 years. Okay. And you're probably one step ahead of me, taking one look at the chart. And what have we got here? We've got the now famous gold cup and handle pattern that formed during that time period. And what do you see on the top right-hand corner? Of course, you've got the handle. And again, you know, the handle, as I said, it can take a variety of forms. It doesn't have to be any particular shape. The price action will do what the price action does. It could form some kind of a downtrending pattern and then it break out. It can form some sort of, as in this case, actually, another cup. Because if you draw another cup in here, you'll notice that that is itself a cup pattern. So you've got a very large cup pattern and then a smaller cup in the top right-hand corner, and the price goes on, accelerates out of that pattern. So we've looked at 3 different charts there on the hourly time frame, on the weekly weekly time frame, and on the monthly time frame, and all of those chart patterns formed within those time frames. So as you zoom in, it's a little bit like a Russian doll, and you're looking at fractals within fractals within fractals. You're looking at patterns within patterns within patterns, and these chart patterns repeat over all time frames, and you can use them to your advantage on all time frames, whether you're playing the daily chart, the hourly chart, playing the weekly chart or the monthly chart, or you're investing on a monthly chart. If you were playing this chart, of course, you would probably have noticed this breakout back at $1,300, $1,400 or so, and you'd have thought that was a very good time to invest. And nothing that's happened since has changed that view from $1,400 to $3,400, that $2,000 rise, and gold is still in a bull market. So all of these patterns help us with our trading and our investing as well. So I hope that's helped you to just appreciate the fact that these charts, they build out on all time frames, whether you're a trader or whether you're an investor.
Yes, Kevin, that was brilliant. People could see there the price trending in different fashions on different time frames, and it could generate the same results, right? You could zoom in, zoom out. Those fractals are there everywhere. So guys, thanks very much for watching. Make sure to like, subscribe to get more awesome content. Thanks.